and it is getting real in 3, 2, 1. Boom. Let's go. Welcome, friends. Today it's G Money, real talk on everything mortgages and real estate. And I'm here with Rob Leatherwood. Welcome, Rob.
Thank you, Craig, for having me.
Today's a treat. Today, I've got to share, Rob is a Director of Government Affairs for the VCCAR, Ventura County Coastal Association of Realtors. That's a mouthful.
It is.
That's why we do acronyms, friends. So I've said it once, you've learned it, we've got it. So he represents the local Ventura County Association of Realtors. What's awesome, he's from the great state of Texas.
Yes. Love Texas.
And you made the reverse migration.
You know, it's funny because like a lot of people actually made the joke to me. They're like, hey, did you get the U-Haul for free since you were just bringing it back where it came from?
That's pretty witty right there.
No, it was not free. But it was actually really easy because I was coming just south of Austin, a little college town called San Marcos. I went down to San Antonio, got on 10, and then I was literally on 10 until Los Angeles when I got on the 101 to come here.
Yeah. I helped a friend move to Austin, Texas. I did the reverse road trip. He said, hey, it's the same price for me to do a pod and just fly out there. And I said, but you don't get the road trip, my friend.
Right.
So we road tripped it, and it was quite the adventure.
Well, and I had I was pulling my truck on a trailer behind the U-Haul.
As did we.
And so the math that I had done in my head as far as how long it was going to take to get here was done at like 70, 75 miles an hour, and we didn't even get close to that.
Okay.
So it took a little longer than I really anticipated, but it was fine. It was a nice drive.
Yeah. Once you enter Texas, it feels like it's never ending.
Well, and the thing is too, like having lived in Texas for so long, everything is like super far away.
Yeah.
So going like across the country, it was like not that different than going across the state. Like I remember when I was in college, I went to Texas Tech up in the Panhandle.
Okay.
And I'd have friends like down in Austin who are like, hey, like when are we going to see you? I'm like, I don't know. It's like you see me when you see me. It's like I live 7 hours away from you, dude. Or I remember one time I was
FaceTime.
Yeah, I was in Amarillo when I was working for Texas Association of Realtors. And I had a buddy who was getting married in a little town just south of Austin. And he texted me like the middle of the afternoon, like, hey, where are you? Like, when are you going to be here? And I texted him, I was like, dude, you see me when you see me. Like, I want you to look at a map. When I left this morning, I was closer to Denver, Colorado than I was to you.
Yeah. Well, welcome to California. And Amarillo is Amarillo in California.
Right.
Double L's is a Y, buddy.
Yes. No, it's very funny the way like Texas people do that.
Yeah. So born and raised in Texas?
Yeah. So I was born in Missouri, just outside Kansas City. But we moved to Texas when I was like 5. So pretty much Texas is all I've known until I came to California. I did a little stop in Washington, D.C., worked on the Hill for a little bit before coming back to Texas. So, yeah, mostly Texas before coming here.
Have you found a good barbecue spot in Ventura County?
So I haven't found a good barbecue spot. I mean, like Woodfire's all right. Okay. I've been to some catered events though that had barbecue. Okay. And the first time I went to it, or that I had one, I was like, we're gonna see how this goes. And California barbecue is actually surprisingly good. Maybe I had the standards set really low or something, but it's like very good. Yeah.
We don't have brisket. Well, no, it's becoming more popular. I'll say
brisket's becoming more popular, but tri-tip. I mean, and this is like heresy in Texas, but I actually do prefer a tri-tip to a brisket. I worked for a guy like out in the oil field in West Texas, and he was from Bakersfield, and he was like all about the tri-tips. And whenever he'd come out here, he would bring a giant like igloo cooler with him and just bring like 20 of them back to Texas with him.
Oh goodness.
No.
The tri-tip smuggler.
Yeah, right.
Right. Well, here's what's excited about today is we get to talk in, as I always say, it's mortgages and real estate and everything in between. And real estate and being a realtor, and we're going to discuss very fanatically what that is parallel. We work together. We work in the same industry, right? But it is kind of a different world at times. And so just kind of an intro is when I first got my got into lending many moons ago, the license criteria was you got your real estate license. And it's a very small section, a few chapters in the real estate exam about truth in lending and TRID, and TRID's newer, but just some of the original
TRID, the reason I drink.
Yes, thank you.
Yeah.
So that was the original license, and then unfortunately, it takes unfortunate circumstances for regulation and things to change, and it was apparent after I call it the foreclosure crisis. So between 2008, 2010, all of the foreclosures, the downturn of the economy. Everybody remembers that time if you owned a home, and they realized that there was, certain states that had zero licensing. You didn't even have to get your real estate license in order to practice lending. And so the reform came out where they said, hey, we got to do something. And so they created the National Mortgage Licensing System, which is a nationwide exam. And then if there's certain states like California where you want to have an endorsement, then you took a, additional test or additional course for you to be licensed in that area. And so I worked for my real estate license, and I had it, and I've never earned a commission on it. And so it was one of those, but I just didn't want to relinquish it. I was like, so to this day, I still have my real estate license, but I am not a realtor. And the classification is there's the board of realtors, and you have to say it like that because it is very fancy and proper.
Oh, we don't go to the docator, and we don't ever sign up a realtor. It's realtor.
Okay.
Yes.
Yes. You have to join their association and be part of that to have the designation as realtor. So I do not have that. I have my real estate license, as I told you, and I've had that. And then, interestingly enough, as I've added other states to my NMLS, Oregon, Washington, they've since changed the NMLS exam. And so I was grandfathered into the old one. And recently I learned that I had to take the new exam. And so I'm on the current exam and whatnot.
Do you feel like having your real estate license gives you a little different perspective than maybe someone who doesn't have that background?
I do. I understand the RPAs, residential purchase agreements, and I made sure with Rob, any acronym that we use, right, we're going to properly introduce it. I've helped friends and different people that I know do for sale by owner, and it's like I'm not trying to take business away from anybody else. It was just, the loan is here. They're buying it from their mom. They just, here's the paperwork. Well, I have my license to do that, right? But I don't charge a fee. I just want to be held harmless of
Sure.
Do your diligence. Right. And between myself and escrow, you can legally purchase a home on a BevNap as long as it's in writing.
Right.
And that is something with real estate. And Rob can speak to this a lot more. I mean, he has the background.
I wouldn't encourage that transaction.
No. But real estate, unlike other California agreements, other agreements can be oral. Whereas in real estate, if it's specific to real estate, it has to be in writing. And so that's where the BevNap comes into place. Of, hey, you put it in writing on a little BevNap, you can buy a house from me. So,
right.
Yeah.
Well, as I said, I wouldn't recommend that.
Yeah.
But it is interesting how those the different industries are regulated, differently, and I think that there's a reason for that. When you talk about, you work with homeowner or property buyers like every day. I mean, they're not homeowners until you get to across the finish line.
Sure.
But for many folks, this is the largest financial transaction they are ever going to make in their life.
Absolutely.
Okay, this is their nest egg. This is their opportunity to create and pass on generational wealth. And so for a number of reasons, it is in everyone's best interest that be highly regulated.
Oh, of course.
Yeah, for sure.
And, let me just back up here a little bit too. I introduced you as the Director of Government Affairs, but let's talk a little bit about that. Political position representing the local realtors. Did you get into politics? Did you get into real estate? Tell me a little bit about the background and what your specific job is.
So the background is, so as I mentioned, I originally came from Texas, and I was raised in a little bitty town called Brady, Texas. Now, Brady is the heart of Texas. It is the geographic center of Texas. And it's like 5,500 people. It's like really, really small.
It shuts down for football on Fridays, correct?
100%.
Yes.
100%.
I love Brady already.
Yeah, it's great. We have in over Labor Day weekend, the World Championship Barbecue Goat Cook-Off is in Brady, and like quite literally, Greg, people come from across the world to compete in and cook and meat goats. And it's like millions of dollars for our local economy. It's like a small town thing.
I love it.
My parents own and operate a funeral home there in Brady and have since 1993. And so growing up, my brother, my sister, and I were raised in an environment where
you cremated folks.
So my parents don't have a crematory.
Oh, okay.
But they would outsource that to another company.
Sure.
But we were raised in an environment where it was like very, very important to take care of people, be serving others. It's very, very important to be involved in your community because no matter how successful you are, you didn't get there on your own. Like there were people that helped you there. And so as I graduated, turned 18, decided to move, go to college, kind of deciding like what do I want to do? And through high school, I'd been a debater, actually won a state championship, and I knew I wanted to do something that allowed me to help people. And, I thought, you could be like a doctor or a teacher and help one person at a time. You could be like my dad and help like one family at a time. I decided I wanted to do public policy because that gives me an opportunity to help like thousands or millions of people at a time.
Wow.
So I did my undergrad in political science and communication studies because I learned very quickly, it doesn't matter how well you understand something if you can't communicate it to other people.
Absolutely.
So I graduated, did a few sessions at the Capitol in Texas, did a session, a stint in D.C. on the Hill there before I started working for the realtors. And I started working for the Texas Association of Realtors, like about 10 years ago, actually.
Wow.
And how like when you like go on a first date with somebody and you just like immediately know like they're the one for me.
I've been married a long time. I don't remember first dates.
Okay.
No,
that's like the first one with Sarah, right?
Yeah, yes, of course.
Yeah, that's basically how I felt with the realtors. Like I knew like this is where I want to be. We work to solve housing issues, housing crises, protect property rights across the country. And, quite honestly, it's about the best paying political work you can get without having to sell your soul.
Yeah.
So I went to politics first, and the realtors found me to answer your question.
Yeah.
And then as far as like what I do, what my job is basically to ensure the professional interest of realtors and their clients are fairly represented and understood by electeds, by staff members of electeds, whether we're talking about the city government or the county. Specifically, that's what I do is all local stuff. We have CAR and NAR for state and federal. I'm also spent a lot of time building relationships with other organizations throughout the community, primarily organizations within the housing space. But as we say at National Association of Realtors, right, like under all is the land. You could make an argument that, especially here in California, that housing touches everything. Mm-hmm. So our goals are to continue promoting those interests, promoting these programs, educating the community is a huge part of what I do on this stuff. I feel like there's a lot of misinformation floating around out in the public, as far as like the housing crisis and what got us to this point and what's going to be required to get us out of this mess. Mm-hmm. So a lot of my job is educating the public on different things. Let's see. There's a lot of like voter mobilization, both internal and external, especially in like 2024, an election year, that I spend a lot of time on. I'm very pleased that this, I guess literally like 2 days ago, right?
Yeah.
We had election day here in March, And all three candidates that the Ventura County Coastal Association of Realtors supported for supervisor won their election. So I was very, very pleased.
Yeah. Shout out to Matt Levere.
Yep, he's the best.
Yeah, no, and I can definitely relate. And as you gave the analogy of that first date, with Sarah, like I've been in real estate quite a while now, and I love it. And what's so exciting to me is like, yes, we have our guidelines, we have our rules, we have our regulations, and but at the same time, no matter how many times I've done a loan, 100 loans, 1,000 loans, no two loans are the same. It could be the same credit score, different down payment. It could be a different purchase price. I mean, but a lot of it is, one, as you mentioned, I'm helping, and I always remember that, I'm helping get somebody into a home if they're a first-time buyer, or if they're a subsequent buyer, I'm helping them step up maybe to their dream home. They were in their intro home and they had goals, and now they're achieving those goals. It's not one day you wake up and I'm going to buy a house and it's done that day. There's no impulse buy. There's a lot that goes into that. And I always remember I just try to make sure that I'm a key component in that, in guiding them into their goals. I always want to follow their goals, not just me. And as a professional, we have to be good listeners to people, because, what I want out of a house is quite different than somebody else. But it is fun. And, as there's been wonderful years, as there's been challenging years, it's kept me in the industry. And, I'm very open about it. The foreclosure crisis back then was very difficult financially on myself. And I just kind of scratched my head and I said, do I still want to do this? I'm not making any money. I'm barely getting by here. You grow your business, and it doesn't matter how great you are or you think you are as a salesperson. If people can't afford it or don't have the credit, right, there's certain external factors that prohibit you from being successful. And so I scratched my head and said, I love what I do. And I'm going to be honest. I, selfishly said, hey, I got to chase the money a little bit. I'm from the Central Valley. I don't think you know that. Up in Modesto, Stockton, Lodi, they had some of the highest foreclosure rates nationwide. Homes that were selling for $450,000, you couldn't give them away for under $100,000. And so there was, wow, my phone never stopped ringing. It was just like, hey, bud, I can't help you. You're so far underwater, and a lot of the programs for refinancing came very late and delayed, So it was like, hey, if I go to Ventura, and one of my friends and loan officers relocated here, I came and visited them. I'm like, I like this place. And if I just do one loan a month, right, on a very modest living, I can live and continue to do what I've done. And I've established myself, I've built myself, and, not only have we grown, but we own our building now. We're doing podcasts. We're doing so many things I would have never thought back in 2010 as I was operating out of, my house.
Well, I mean, not only all that, I mean, you do the Love Ventura. That's how I met you and Sarah.
Right. And, it kind of comes full circle. I'm not going to say, hey, we just become best friends, but like, the more we're speaking here, and I haven't known Rob too long, we met through our nonprofit that Sarah, my wife Sarah, and I have, Love VC, for Love Ventura County, for us to grow it. But the initial movement is the Love Ventura, and it's to give back. And that's genuinely, from our hearts. We do it. Costs me money. Every loan I close, I contribute money to the nonprofit. We do it because we love the community that we are part of, that we're established in. And ultimately, that's how we met Rob. Now, the irony here is I was kind of a late bloomer into humanitarian work. And so, early years, I was in real estate making good money, and I was always, very generous with my friends. But it wasn't like, hey, I'm going to go pick up garbage today. My first time that I ever really, volunteered was in Austin, Texas. That friend that I helped move to Austin, Texas, he moved there for his daughter. He didn't know anybody, and I was going to go out there and visit him after I helped him move. And I went there for Thanksgiving, and I said, hey, we're going to go out to the bars and have some beers and, be guys. Let's let's try to do something good. I hear you can volunteer on Thanksgiving.
Yeah, I hear that's a thing.
I hear that is a thing. And so he signed us up for multiple things. I'm sure in Austin, you're familiar with Operation Turkey.
Yes.
We volunteered. We became managers of that. I wound up in the newspaper quoting me. I had such a blast. And then downtown Austin, they had the parade where I was holding Snoopy. And let me tell you guys.
Because it's still 80 degrees at Thanksgiving in Austin.
Yes. That is no easy task, holding a float for hours on end. I'm not going to say don't sign up for it, but just be very conscientious of what you're signing up for.
Yeah.
So anyways, I love how our stories and our paths are crossing here with Austin, Texas and whatnot. So fast forward here, what led you to move to California? I mean, we said you moved to California about a year ago, but was there a specific job or was there something that you were, coming after?
Yeah, so I was definitely looking to make a change, and so I'm enrolled at Pepperdine. I'm working on my MBA.
Oh, wonderful.
And at the time, I was doing the online program. And so I kind of was looking to come to California because I thought it'd be easier to do a program where I'm in the same time zone as the program.
Yeah.
Because it sucks being like 9 o'clock at night and it's like, let's start accounting class.
Yeah.
But I was also at the time looking at a job like out on the East Coast. I was going to split my time between basically like North Carolina and Washington, D.C. And the job here in Ventura County just like came together like very, very quickly. And it was actually like sort of amazing. I felt like in a lot of my life, both on the personal side and professional side, I've been like swimming upstream, like always like fighting, just things that aren't meant to be. Coming to Ventura County, Greg, was like the easiest thing in the world. Like literally everything just kind of like came together. Like finding housing was super easy, which like literally no one's ever moved to Ventura County and said that.
Yeah.
Finding housing was easy. Like I said, the job came together. School's been awesome. I've met some like incredible people over the last year. So it quite literally is. It gives me a sense of peace, feeling like this is very much where like the universe thinks I'm supposed to be.
Yeah, that's great. I moved here. I wasn't born and raised. I feel like there's still that little niche where, you got to earn that respect, but rightfully so because it's a hidden gem here. We're 30 minutes from Santa Barbara. We're 30 minutes from Malibu. We're smack dab in the middle. And although prices seem outrageous here, if you're caught in this little bubble, we're such a bargain comparative to our neighbors on either side. And so, 310 days of sunshine a year. We have beautiful agriculture that's still here and still fighting to stay alive. We've got the ocean. We have the islands. We've got Ojai. Hey, I'm selling myself that I love it. I mean, just talking about it, I love it here.
Well, there's a reason we all know that the cost of living is high here, and we all recognize that you have to pay that sunshine tax.
Yes. I will say on the flip side of that, housing is more expensive, but at the same time, and maybe not from Texas, but from another part of California relocating, the Central Valley gets very hot in the summer, triple digits. The winter time gets very cold, freezing pipes. So utilities, you may have a $2,000 mortgage, which here in Ventura seems very inexpensive, but you may have $800 or $900 of utilities each month. You might have a $500 heater bill, your gas bill. Also, beautiful Modesto. I'm not picking on you. I'm from you. Got a lot of friends there still. The auto theft per capita is one of the highest in the industry, and so auto insurance. So it was very interesting when I moved here. Although the housing was more expensive, it was like, hey, my AAA membership is less expensive. My car insurance is less expensive. My utilities are next to nothing. Like there was other ways that rightfully made up for that, and so I think it's all in the perspective of where you're at and what you're getting.
Yeah, my gas bill is next to nothing every month. I think it's like 18 or 20 bucks. I mean,
Right.
Usually it's not very much. My electricity bill is higher than I expected it to be, and I'm not sure if I'm just maybe not on the right plan. Although I talked to Southern California Edison, and the difference between the plans is like 80 cents. So I don't,
The time of use, they've really got you. So you have
Yeah.
to make sure you're not doing laundry until after 9 o'clock.
Right.
Believe me, with a house of young children, I mean, I switched our bathroom timers to motion sensors because they couldn't turn off the light
Right.
switch. You know, you have to adapt and make some of those improvements, but it's for the benefit.
but the even though like my electric bill is, like I said, higher than I thought it would be, it's less than what I was paying in Texas.
Oh.
Because I'm not running my air conditioner like 365 days a year.
Right.
Like the only time I really run my air conditioner is if I like burn some food and need to like circulate the air in my apartment. Other than that, I just have the back door open. I mean, we live like 4 miles from the ocean, dude. It's just not
Well, I'm
hot.
a little closer than that.
Yeah, it's just not hot.
Yeah, I know. It's great. Well, we've got you. We've got the director of government affairs. We need to talk some politics. We need to talk some, what's going on. As you know, what I love, this is, typically prior to sitting down and doing a podcast, I've got a few notes and we do our research as best as possible. We've had realtors on here, insurance, mortgage insurance, various industries. And this was like, I think we had the longest intro and discussion, and that's what I already love. We know we got some hot topics when we got to go, what can we talk about and what can we not talk about? And, a few notes of just what do we preliminary discuss and what I shared with him in doing my research is the realtor world is very well protected and it's a large entity in contrast to the mortgage world. And I think, a lot of people don't understand there's a difference between, a large box bank and some of the mortgage brokers, and also the guidelines and the representation of who oversees them and who advocates for them. Just looking up a few of the local, for mortgages, we have CAM, NAM, MBA, California MBA, like just a few. It's broken down into several different entities. Now, I gave you the disclaimer. Any acronym I'm going to give you, we're going to explain what that is. The CAM, C-A-M-B, is the California Association of Mortgage Brokers. So a broker is somebody that does a loan, but not in-house. You're a broker. You can shop around different banks. You can find possibly the best fit for that. And you act as the middleman to provide a product to the end consumer. Well, there's CAM, which is the California side of that. But then there's NAM, which is the National Association of Mortgage Brokers. But then you have entities like American Pacific Mortgage. That's who we are, is we're a mortgage bank. We do everything in-house. Now, we don't have CDs and checking and savings. We're not FDIC insured where we're holding your deposits. We're exclusive to originating mortgages. We lend our own money, and that falls under the MBA, the Mortgage Bankers Association, and then the California Mortgage Bankers Association. So there's all these different little and large, I'm going to say, entities that cover lenders, but really the powerhouse is with the realtors because they break it down, and you can, correct me and clarify, but we have the NAR, which is the National Association of Realtors, and then specifically we have the CAR. I don't know if you call it CAR. A lot of times they do call it CAR forms. So if you're working with your realtor, they say, oh, it needs to be on a CAR form. It's not a vehicle. It's the California Association of Realtors. There's specific forms that have gone through who knows how many attorneys and, advocates and, lawsuits to make sure that that form is properly representing what it needs to be. Even adding and removing a person on a contract, it used to be just an addendum, and now it's an AOAA. There's acronyms for everything. Don't ask me what that means, but I'm not on the realtor side.
Right.
But I'm just saying that there's, tried and true forms to protect the consumer, and that's great. And then we come to the VCCAR, which is the local. This is the county representation. And again, that's what, Rob, where he works. But you work with CAR and NAR, like interact with them. How does all that work?
Yeah, so we are always in communication with our friends at CAR and at NAR on the issues that they're working on in Washington and in Sacramento. Those things, though, are things that we keep an eye on, but I always try to remind the public or remind my members that the things that are happening down at the Planning Commission locally or the things that are happening at City Council locally affect the day-to-day of your business a hell of a lot more than anything they're doing in Sacramento or DC.
Absolutely. Right.
And so that is what we do at the local level, is pay attention to all that stuff. So here in West Ventura County, I got Camarillo, Fillmore, Ojai, Oxnard, Port Hueneme, Santa Paula, City of Ventura, and County of Ventura that I'm paying attention to every committee, all the councils, the supervisors, everything that's going on, and anything that threatens home ownership, private property rights, we're on that. Conversely, though, when our electeds want to try to solve problems, we're always happy to provide our expertise to them as industry experts.
Sure.
To help them, to help guide those policy choices and make sure that they are actually solving the problems that they're trying to solve, and that they're not going to break 3 or 4 more things trying to fix one.
Yeah, no, that's awesome. I mean, that's a great way to put it, and that's what you have to always analyze is, is it just a fix for one? But if you fix one problem, does that lead to others? And there is always cause and effect, right? I mean, there's that terminology for a reason. It likely does occur, but at what expense? And so, anything you're doing, you want to do the research, the reports to make sure that your impact is as light as possible on other issues. With issues being involved, can you share a few things presently that you're working on? We don't get too, get as detailed as you want. I don't care. But what are you working on right now?
There's some cool stuff going on right now. So several of our local governments are implementing new tiny home and/or ADU ordinances, which is kind of neat.
Okay. Real quick, what's the difference between a tiny home and an ADU?
So my understanding is that a tiny home is on a chassis, on wheels.
Okay.
Whereas an ADU would sit on a foundation. It'd still be a tiny foundation.
So quite possibly, and I'm just sorry to interject here, but I'm just trying to paint the picture. ADUs are a hot topic, accessory dwelling units, because of the housing shortage in the area. So a tiny home could be something possibly prefabbed. Maybe, you can even buy it on Amazon or Home Depot. I mean, I've seen some of barn dominiums that you can buy on there. So, hey, it gets shipped, it gets delivered to your house. You maybe put it on a permanent foundation to fix it, and you've got yourself a tiny home. Okay, got it.
Yeah, so some of our local governments are considering ordinances on this, which I think is very, very exciting, especially that the state has given them the opportunity to do this. Local governments there's still some opt-in situation there.
Yeah.
But, I think here in Ventura, of course, across California, but particularly in Ventura County, because of SOAR and other things, we're going to have to be particularly creative and innovative in the way that we solve our problems, or our housing issues here in Ventura County. And so, every tool that we have in the belt to help solve that, help fix that problem is good. So ADUs, tiny homes, extremely cool. Mm-hmm. Each city and the county government is also required under state law to have a general plan. And then as part of that general plan, you have your housing element.
Sure.
So in Ventura, they're redoing the housing element this year for another 8 years.
Yep, they've been working on that for the last few.
Weirdly, as I was researching this, Ventura is the only one doing that right now. All the other cities are on the same schedule, and they're good till 2029, but Ventura's kind of out by itself.
Yeah.
But whether you're drafting a new housing element or you're in the process of implementing an existing housing element and the programs that encompass it, there's a role for us in those conversations to see how those programs are implemented, or to weigh in on what a new housing element will create. So we got a lot of housing element stuff going on right now. In fact, in Ojai, the Planning Commission and city staff is working on some ordinances to, as part of, I think it's Program 15, of their housing element, to implement objective design standards. And I actually have a meeting tomorrow with someone to learn more about this and how this works. But my understanding is that it's like, think of like a master plan community. Mm-hmm. It's basically like that, but on like a whole city scale. And if you if you do your project consistent with one of these templates, basically, it like streamlines the permitting process.
Interesting.
So that's something we're kind of working on. There's a lot of rent control and tenant protection ordinance stuff that's kind of being discussed right now, both particularly in Ventura and in Santa Paula, as far as like new ordinances that might come our way. Of course, like a week or two ago, the city of Oxnard released their fee study after very nearly 2 years of us waiting for it. Mm-hmm. And we now have a picture of what they're expecting housing providers or property owners to pay to be able to legally rent their property. Wow. In the city of Oxnard. That's like a whole dumpster fire that we're going to have to deal with. The city quite literally like pulled their data from Craigslist listings. I'm not sure why they did that, considering that we have the accurate data and we've offered it to them repeatedly. Yeah. But they just have not, to this point, shown any interest in having us as part of the process.
And just off the cuff here, I'm curious, and this what comes to mind. I can kind of go both sides of rent control, right? Like, you know, at one part there's like this free enterprise, this entrepreneurship of supply and demand, and there's like, you live in a highly desirable area and you're going to live at the beach. Well, there's only so many houses at the beach. You got to pay what the beach prices are. Like, and I guess my question, and could be an odd one and you want to decline to answer it. How do you know in your position what side to take on some of these issues? Like, you know, how much is personal versus like, do you pull the realtors to say, okay, where do we stand on rent control? And I'm curious of where does the VCCAR stand on rent control?
So those are all really, really good questions. To start with the first one, so it's interesting coming from Texas, learning about like rent control and rent stabilization, which are different things. Rent control allows the government to regulate the initial rent as well as increases, whereas rent stabilization, you can do like what the market is, whatever the market is for the initial rent, but then they regulate the increases. Sure. So there's a little bit of an important distinction there. I've had to learn a lot about this in the last year, and one of the things that's been interesting to me is I can't find one demonstrated instance of rent stabilization actually reducing the cost of housing in California or on the West Coast in general. You can find some limited success with it in certain markets on the East Coast, but that's a completely different world. That's 3,000 miles away. That's not California. That's not the West Coast. It's also important to distinguish the rent control or rent stabilization piece from the tenant protection ordinance, because those are different pieces. On the rent stabilization or rent control side, the evidence is pretty clear that not only does it inhibit growth of it inhibits supply, when very often supply is already your problem. So you're sort of like doubling down and throwing gas on the fire. Mm-hmm. It creates a situation very often where, for example, around here, there's a lot of like mom and pop tenants or housing providers that have been renting to the same tenant for 8, 10, 12, 15 years and have raised the rent once, if that. Right. But under a rent control or rent stabilization situation, they would basically be locked into doing whatever's allowable by law, like year over year. You will have some properties, we've seen some properties that the cost of maintaining that property is not keeping up with the allowable rent increases. And so maintenance and investment on the property like really takes a back seat. Mm-hmm. That's not good for the renter. Yeah. So we can sit here and have like a lot of conversations about like the negative impacts to like a housing provider or to a property owner. But even that aside, this is not good for the renter. Right. It doesn't really like slow down the cost of rent increases. I would also remind people that in the state of California, under state law, under current state law, this is going to be on the ballot in November. We'll kind of see how it goes. But under current state law, when we're talking about like rent control or rent stabilization, that can actually only legally be implemented on multifamily properties 1995 or older. So if you're living on something that's like newer and you're like super excited for your city to pass rent control or pass rent stabilization, understand that that's not going to help you.
Wow. I mean, I never do that. And why 1995?
So 1995 was the passage of what has been the law of the land since then, known as the Costa-Hawkins Act. And the Costa-Hawkins Act is a state-level law that restricts certain types of extreme forms of rent control. So like one of the big highlights from Costa-Hawkins, for example, is that it exempts most single-family homes. And it only applies to single-family homes. You have the 1995 cutoff, so that anything 1995 or forward is not included in that. Mm. Otherwise, you would have a situation where like new buildings are under rent control immediately. Mm. That would necessarily create a situation where like not you've been in this business a long time. Do you know any investors that are going to invest in something when it's going to take them like 100 years to get an ROI?
No, and as you're speaking, this is exactly what I'm talking. My wheels are turning of like this impacts values. Even like commercial real estate, how a value is determined is based off its rents, right? So like the return on investment, but they call it debt service. If a liability is $1,000. So let's say the taxes, the insurance, the yard maintenance guy is $1,000. For them to even consider getting a loan, they need to have 125% or 1.25% debt service. They need to bring in $1,250. Well, now if you're only bringing in $1,000, what's that property worth on the resale market? It's devalued because of the lack of rents. And I see a lot of listing. I'm not active and looking in the MLS, but I have clients that come to me and they're wanting to buy multi-units. And I go, okay, what are the rents? They have to disclose what we call rent rolls, the last 3 years. What are they renting it for? And then, so many times we get this, well, it's a little old lady and she's been there 20 years. It's under market. And I'm like, well, it doesn't matter if it's under market. That's what they're providing in rents. That's what needs to be used for the rent rolls, unfortunately.
Like that, the number's the number.
Yeah, right? Yes.
So, we are working with our community partners to try to get this message out that this is not good for renters. So that's something that we're working on. Of course, we're in an election year, so a lot of voter mobilization as well as like consumer mobilization. Part of, I alluded to our supervisor races earlier this week. We will also be doing like later in the summer. I'm very excited for this. There's between the 7 cities that we operate in, there's somewhere between like 20 and 25 city council seats that our association will be making decisions on who to support in those races. And our members and the public can rest assured that we're going to be supporting pro-growth, pro-housing candidates. Yeah. The housing problems that we have in Ventura County are not unique. They are solvable, but only if people are going to step up and do the right things. And so we want leaders that are willing to have hard conversations and take tough votes and move Ventura forward. Yeah,
no, that's great. I love it. So we, again, previously chatted on a few little topics, and I went to your guys' website, and one of the initiatives that you guys have is remote online notarization. And there's a couple different topics that I want to like bring up because I feel maybe we're in the same industry, but working specialized or exclusively on the loan side of things, some of my feelings or beliefs are slightly different, or I don't know how we say it, but so let's first start with the VCCAR's, support or not support. Where do they stand, and what is it on the remote online notarization that you guys are working on or have a say in?
Yeah, so that's going to be a state level thing. That's going to be like all CAR. But I can tell you that back in 2023, I say back in 2023 like it's July, it's March. That was just like a few weeks ago.
A couple months already.
They were able to get past Senate Bill 696, which would allow the Secretary of State to certify necessary technology by 2030 to include for online notarization. It would require 2 forms of identity proofing to be verified by a live commission notary. Out-of-state notaries are already recognized de facto under this. And in January 21st, 2024, they will receive clear recognition as long as the notarization is conducted in accordance with the law of the jurisdiction where the notary is commissioned. So as far as VCCAR, that's like I said, it's like a state thing.
Yeah.
I know though that we were discussing this a little bit before we started recording the show. It's something that was really popular like during COVID within the real estate industry certainly, but across like other industries as well. Like I worked for a different trade association at the time, and it was something they were clamoring for as well.
Yeah. I'm going to elaborate on my background because, and maybe this also kind of convolutes my opinion. At one point I was a notary, and so going back in my early years, it wasn't, we'll say where I was trying to make extra money. It was the convenience of it that, where do we require a notary is not until the final loan documents, and that's the formal loan commitment. So from a lender standpoint, we want to assure, and that's the specific role of a notary, is to verify you are the person in question signing the documents. And so you have to have an active, valid ID. There's some crazy alternative methods of witness, and I'm not going to get into that, but you've got to be able to prove who you are. And I don't think that's unquestionable when you're signing mortgages. Nowadays, hey, the conforming loan limit is $766,000. That's nationwide. There's a lot of people signing $500,000, $600,000, $700,000 notes to be reasonable to verify who you are. Now, speaking with a lot of the notaries that I work with, and just asking them questions, they've said that things have attempted to be rolled out, and there's been different machines, and maybe it does an eye scan or a thumb scan,
like a biometric thing.
Yeah, sure, some way of verifying somebody. I can see potentially that could work, but ultimately what I shared earlier is like at the end of the day, when somebody is signing a $700,000 note, to have somebody there, and I want to be clear, the notaries that are signing loan documents are not just any notary. They're loan signers, and they are vetted through the title company. Most of the time they have, one, for a title or escrow company to allow them, they have to be previously vetted and signed up with. So if escrow is with First American or Fidelity National Title, they're not just going down a notary list and calling any notary. They have to be a loan signer, which means they're familiar with and certified in going through loan documents, right? Because there's a lot of specific documents within a loan package that consumers may have questions on. So I want to make sure people understand that. And I get that all the time. Oh, my cousin, my brother, my sister, my neighbor is a notary. Can we use them? And it's like, no, they have to be approved. Secondly, a notary carries what's called E&O, errors and omissions insurance. So if they make a mistake, and some of the title companies require some very high coverages, whether it's $500,000 or $1 million, nowadays $1 million lawsuit is nothing, so if the notary doesn't have enough coverage, well, now the title company is at fault for selecting them, and they're going to have to get embattled. So they want to make sure that they're doing the proper vetting with notaries. So I know I'm getting a little winded here, but I think, where do I stand on that is all I hear in the news these days, maybe I'm listening to the wrong channel, is this company got hacked, this company got hacked, this company got hacked. And so allowing exclusivity to technology, I think technology should be a piece and a component in that, but there's nothing like the personal interface. I can read your bio, Rob, and say, wow, this guy's great. But it's not until I meet you and shake your hands and look you in the eyes that I get this warm feeling of like, wow, Rob's a great guy. And, and I think there's something with the Notary Act that when you're signing a mortgage, not only is it the ability to properly review the documents that you're signing with somebody that's familiar with them, but being able to ask real-time questions and not just like, how often do we do this? If we review something and, I'll come back to this later.
And then you don't come back.
And then you don't come back to it. And so I like the in-person touch for the notary. I think it's a good requirement. You know, I know anything could be falsified. I mean, there's fake IDs out there, and you know, I don't want to play devil's advocate all the time, but again, if that notary doesn't feel comfortable, the other thing that it comes down to is capacity. And more we're dealing with this. We have an aging, community, and we have people I've done more reverse mortgages lately than I've ever done. And so it comes down to the capacity. Are you in the mindset, Alzheimer's is very prevalent. Do they understand what they're signing? And if they're at home and their daughter is the one signing it for them, how do we know that that was in the best interest of that borrower? And so, again, I'm just kind of pointing out the things that I deal with, that I see, that I don't think, as it is now, we've streamlined a lot of loan signings where we can send you electronically to e-sign a lot of the redundant disclosures that we have. There's many just disclosures. I mean, it's just your borrower's authorization. It's a 4506C form. It's, whatever that form may be. But then the very pertinent ones, we do require the in-person notarization. And so I try to be at a lot, if not, most of my loan signings, because that's a representation of my work. Not every lender does that. I don't care what other lenders do. I look at my work of when the consumer has the question, I'm there, and every loan signing, they have multiple questions. So I know it'd be convenient. I just don't think, and I'm not saying in ill will, that realtors wouldn't and shouldn't love the e-signing capability. I think in theory it sounds beautiful, and it's like, hey, they can e-sign while they're in Cabo. Oh, absolutely, that's great. It doesn't hang up escrow. It doesn't do any of this. But when we're flipping the coin here and we look at the protection to make sure we did everything in our power to make sure that the consumer knew what they were getting into, were properly disclosed, had a copy of it, understood it, and competently signed it, I think there's added value there.
Yeah, I would agree with that. And I think it's going to be something that it's a new thing, right? We're going to have to see how it goes and kind of tweak it over time. But let me ask you this. How many people over your illustrious career in lending have you signed or have signed with you like in person, and you just explained it to them, and they're signing, and you kind of are like, I'm still not sure they get it?
I would say very few to none. Like, I don't get that feeling because, and I'll rewind a little bit about how I practice. I had a mentor getting into this, and it was one of those that prior to me even being licensed, I shadowed. And when I got into the industry, they didn't have e-signing. Mm-hmm. It was literally, and they still call it an initial or a typed 1003. We had to go sit down in person and do these disclosures. You could overnight them, but it was sitting down with somebody in person. And when you sit down with them, and we don't read every line item, there's a header, there's a body. We go through, hey, this is kind of what this means. Some people take it at face value and they trust you, but you have to earn that trust. Sometimes that's very difficult to earn. Hey, we've got attorneys, we've got people that don't just sign anything. And hey, I'm telling everybody, don't just sign anything that's put in front of you, but at least glance it over and ask questions of what does this mean? What are the ramifications if I sign? What if I don't sign? I do what I feel is a very thorough job of explaining each document. When I went to purchase my first home, I didn't have anybody to really guide me in that aspect of even the closing statement. And I just saw a legal size page of fees, and nobody broke down who got paid where and what and how and what's negotiable. It intimidated me, and it took me 3 years to buy my first home. So my approach at lending, and this is what I always say, is through education. Whether we close a loan or not, I'm an advocate for you to understand and learn what you're getting into. There will never be any pressure from me of we have to close this loan and we have to do this. And I don't want you to feel pressured at all of whatever. It needs to be a natural, again, you said this in the intro of this is probably the largest purchase you're going to make. Mm-hmm. You're going to make those monthly payments every single month. And so my thought process is always forward visioned of if I do a bad job now, if I don't explain it properly and they get into something they don't like, or they're just not pleased with me, they're never using me again. Or I can look at this as an opportunity. If I can shave a few bucks here, if I can take the extra time to sit down at their loan signing and make sure I hold their hands, if I explain all that, if I answer all the questions, instead of meeting at Starbucks, let's meet at my office. Or if we can come to you, if that's where you prefer because your children are in bed and it's 9 o'clock, I make those adjustments because I want you to feel comfortable and not rushed and truly fully understand what you're getting into. And so it's just been a different mindset for me. And, you know, hey, I don't want to beat it to a dead horse over here, but that's just kind of how I think is if I do a great job now, I'm going to get your refinance. I'm going to get your brother's loan. I'm going to do this by taking the extra time to make sure you understood and you felt loved and supported throughout the whole process.
So like when you go through these documents with clients, because I've not seen like the California documents, I've only seen the Texas documents. Do you sign with them or is it just their signature?
It's just their signature. Now, on the application, there's one form that we call it the 1003. That's the form number, the Fannie Mae form number, where the loan originator signs that. But other than that, we don't sign anything.
And this is just like a hypothetical, but like, would you feel better about like a digital situation if it required the loan person's signature as well, that we explained this? It's almost like a submarine. Like you'll both have to turn your keys.
You know, I think there's a lot of, so there's a lot of regulations and oversight in the mortgage industry. And it's not just the NMLS because we deal, with money. We got FinCEN. We've got all kinds of like oversight, right? And they do some good jobs. And I'll say where am I alluding to? What comes to mind is prior to going to the closing table. So you sitting down and signing 150 pages for this loan to purchase this house, that's the commitment, right? Prior to getting there, we have to disclose to you a closing disclosure. And that has to tell you the interest rate, the monthly payment. Is there any risky features like a balloon? Can it have negative amortization? Is there a prepayment penalty? Additionally, it discloses to the penny every fee of who gets paid what, including seller paid fees. It also discloses all of the licensed entities of the transaction. That includes the listing agent, their license, their brokerage, the selling agent, their brokerage, my license, my brokerage, the escrow company, the title company. All of that and their licenses have to be disclosed to you in all the terms. When we provide that to you, you cannot just sign loan documents the same or next day. There's a waiting period of 1 week. It's to assure that there's no bait and switch, that you've had ample time to review it. Now, if you acknowledge it, and that's just even previewing it, like if we send it electronically and it shows that you viewed it, you don't have to electronically sign it. We see electronically there's a date stamp that you viewed it. Well, you viewed it, that's just as good. And of course we prefer the signature, but that cuts that time window down to 3 days. There's like a very, very tiny exception for cutting that time period lower than 3 days. I've never seen it exercised.
What is it?
And it has to deal with like if there's no other way, and I've even challenged this of like, hey, a client's going to go out of the country and that still wasn't sufficient to cut it down. You have to prove just cause that it needs to be immediate, and whether that's incarceration, I don't know,
prove just cause to who?
Well, the mortgage company issuing that has to be able to acknowledge that that's just cause that a time constraint is there. But again, I've had many time constraints of people traveling and going all over the world, and it was never justifiable enough. Now, that could be our company not wanting to take the risk of now we have to tell, now we have to have a sellable loan that says, hey, we didn't wait our 3 days. Like, our company is very, very compliant. If this is what the law is, we follow that to a T and we document it. And I support them. That's what it needs to be. This is a protection that, enough people thought was rightfully so. I agree with that. Like, they shouldn't be sitting down on loan documents, understanding what their rate and their payment is for the first time. They're going into that going, yep, Greg, this is exactly what we talked about. Oh, look, the cash to close is $1,000 less. This is perfect. They're walking out happy because everything came out better than what we originally, discussed or promised. And that's the way to do business. But again, just going back to that, we have those rules. So, again, getting sidetracked, I don't know where we started on that, but that was just the rule that came to mind of making sure that the consumer was protected with the closing disclosure.
Yeah, I mean, I think that not that I think, like, I know it's a priority for the leadership at CAR, for example, to ensure that clients are always taken care of and they're always protected. And I think this is a two-way street too, right? Like, a lot of these protections serve to protect the realtor or the lender or the title person or whoever. Like, these things are in place for a reason, to your point. So I think we'll see what happens here in 2024. I think that I'm not sure when this law actually becomes active. I know it was passed last year. I'm not sure when it actually becomes active. I'm a gambling man, probably like April. So we'll see what happens, and I'm sure it'll need to be tweaked at some point.
Yeah, and I'll just say what I've learned from government is their rollout is not always perfect, and that's not just government; it's businesses in general, and things do need to be adapted. But I think hopefully the intent is in good faith, and people adapt to it well. That's all I can say about that. So we'll see what happens. Remote online notarization. You heard us.
The future's here.
The future is here. Yeah. Well, any other hot topics we can talk about? Anything else I can push your buttons on?
Yeah. So one thing I kind of wanted to highlight here was you had asked me about some new trends or changes that I had noticed in California, and two things that I'm seeing. Particularly in California, but it's sort of a national thing as things tend to be. They start here and go everywhere. Because the housing crisis that we have in California is no longer just a California housing crisis. There's lots of places across the country that have a housing crisis. Mm-hmm. And so what you're seeing here in California is some new zoning classifications that came out of Sacramento last year. And that was actually part of a fight, I guess, a few months ago with the Ventura Planning Commission and Ventura City Council. There was a proposal to downzone a lot of where we are right now, the west side of Ventura, and I think they were going to call it light industrial flex. But it was basically going to create a situation where the businesses that have been here on the west side of Ventura for decades in many, many cases, providing good head of household jobs to their employees, we're going to more or less be shut down overnight. So that was something that we, with the chamber and CoLab and others, were able to put a stop to. But there's some new zoning changes that are coming out of Sacramento that, not unlike the online notary situation, is going to take a little bit of time to perfect and totally figure out how it works. But I think the large goal there is to make it easier to build housing. Along that same line, there's some laws that are rolling out of Sacramento last year. I'm sure we'll get some more here in 24 to make building, particularly the permitting and entitlement part, easier. I think that especially in terms of affordable housing, you're going to see a lot more of that being built. It's been very interesting to me getting to know some of our partners in this part of the state, Many Mansions, Turning Point, others. There's a huge need for affordable housing, and as much as we as the Ventura County Coastal Association of Realtors, and I'm sure you want to promote home ownership, whether that's in the context of a single family home or a condo or a townhome, fill in the blank. The math is the math. And we have a lot of people here that need affordable housing, and what they need is not that. We need more affordable housing, whether it's multifamily units, whether it's like deed restricted single family units, like fill in the blank. So I think the state making it easier to build these type of projects is going to be like a huge quiver in our.
I definitely agree. I think there's many things, and obviously in lending, we track everything, right? Because it looks into our future of business. I mean, we track, and I've said it here many times, we track RV sales, right? Because that's discretionary funds. And if you have the money to go out and buy an RV, our economy's doing all right. Now, when you start to see the repos on the RVs and the RV sales go down,
or the people that turn those into a permanent residence.
Well, right, and that the mini homes or tiny homes or whatever we call them, I'm with you in the regulation of making it. Where's the balance of having, and I'm going to give you some examples. I bought this building that we're sitting in, a commercial building, and it was completely gutted when I bought it. And as a completely gutted shell, I'm doing my own calculations of like, hey, what should it cost for electrical? What should it cost for permits? What should it cost for drywall, paint? And boy, was I wrong. And what surprised me the most was not necessarily the drywall and the carpet and, this and that, but the permits and the guidelines. Like, you saw we have an open 1,200 square foot. The back is completely open. We have one enclosed media room that we're sitting in right now. We have a restroom and a little kitchenette. I mean, we are not high tech and fancy. It's as vanilla as you can get. And, having fire sprinklers wasn't enough. Now we have to have fire sprinkler monitoring, but that monitor requires a permit. And then I have ongoing fees to pay for that. And so, one part of it is, yes, streamlining it so it's like maybe one permit that makes it easier to build a house. We can say and pat ourselves on the back that we're doing good there. But again, I'm gonna challenge this, and I see this at the same time we're fighting for minimum wage to be $25 an hour. So our laborers, their first day of work, they get $25 an hour. They haven't worked up to that. They're starting at that. And then they have to have benefits, and then they have to have insurance, and then the company has to have insurance. And then now we require that you have to have solar on any new building. So let me add all this. This is why builders don't build in California, is the cost to do it is so prohibitive. We can go to Texas. Hey, we're building towns right now. Builders are building towns in Texas and create everything, whereas we're lacking that in California.
Well, it's interesting, Greg. So I went to the VC Home Conference back in October, and I sat in on a session with Supervisor Levere. We both sat in the audience, and the session that we sat in on was the cost of building in Ventura County. And one of the things that I sort of figured, like, we're in California, stuff's expensive. We're in Southern California.
Yeah.
Things are even more expensive.
Move the decimal.
But it is more expensive to build in Ventura County than anywhere else in the state. That is absurd. That is absolutely absurd. And if you look at the cost, some of the cost, right, is the result of our land use policies in terms of like SOAR and that situation. It has created a artificial scarcity of land, which has driven up the price tremendously. But if you even set that aside, the actual cost of like entitlement and permitting is like I don't remember the exact number, but it's like a huge part of your of the equation.
Sure.
And so I've been talking with Supervisor Levere and Supervisor Long. Someone from the Resource Management Agency, which is the county equivalent of like the planning department, reached out to me recently, and they are actually. And I'll listen. I got no problem like calling somebody out on some nonsense, but I'm equally quick to pat them on the back when they do a good job.
Great.
And these guys have like reached out to us at the association to show us some permitting streamlining forms that they've been working on, to kind of like solicit like, hey, what else could be part of the equation here. Because like I said, one thing I said to Matt was, we didn't get in this situation overnight, so we're probably not going to get out of it overnight. But how do you eat an elephant, right? Like one bite at a time. And my thought process was, what are some things that can be changed that would make a tangible difference for like a builder or a developer that a council or a board of supervisors would realistically consider? And so the county, to their credit, is working on as much as they can on that right now. That's good. But again, because of SOAR, most of the building we have to do is within city limits. And so I'd like to continue building relationships with the cities to see what we can do to streamline the processes within the municipal boundaries. Because, ultimately, we're just not going to do a lot of building out in the county. If we're going to solve this crisis, it's got to be within the city limits. And to your point, this is another thing we were talking about before the podcast, before we recorded. We're going to have to be like particularly creative and innovative in the way we solve housing issues in Ventura County. And I think part of that equation is going to involve repurposing commercial space.
Yeah.
And that's going to involve like permitting and all that sort of thing. If that's going to be like a viable option for us, that process is going to need to be cleaned up. I guess is maybe the most charitable way I can say it.
We've backed ourselves into a corner housing wise, and hey, we live in a beautiful state. I mean, yesterday I rode my motorcycle before the rain came. I can ride my motorcycle in March. There's certain states out there that put their motorcycle away for months, half the year. I'm blessed to live here, and as much as I have frustrations and contemplate where I'm going to retire, some other lonely state that I have no neighbors, right? We've backed ourselves in a corner. And here's, I'll give you an example. You're talking, we have to build within the city limits because of this and that. We only have so much land in the city. So what is being built is condos. And I have hey, if it's between not building condos, I'm going to take it. But the end consumer doesn't see, I'm going to say how horrible that is. They don't, even the politicians are not aware that it costs you more. Like if you're going to buy a single family residence and a condo, there is what's called a loan level price adjustment. Your rate or fees are higher for the property type. Number two, condos have been hot in the mortgage world, in the mortgage risk world, because of, and I say this analogy, you're getting married to your HOA. You have a partnership. As a condo, you technically only own the walls in, right? So who owns the roof? Who replaces the siding? That is your HOA. So you have to have a good board in place that sees the vision. Who's trained them? Again, it's just all these questions. And then it's money that, do they have sufficient funds? As a lender, we are required to vet every single HOA, and there's different capacities of vetting, but the hot topic is deferred maintenance. And I'm sure you're aware in Florida 3 or 4 years ago,
right,
the condo units on the water that collapsed. I mean, unfortunate. I never want to see that. In Northern California, we had balconies collapse. I just did an affordable housing unit in the city of Santa Barbara proper, and it was one of those that the rain had come in. Again, we see water, but not too much. And the elevator was not working. There was water flooded in certain areas. We had to assure that those items were repaired prior to being capable of lending on it. And I think, again, it's all for the protection of the consumer, but for us to order these documents and to approve the condos, you're going to add at least $1,000, maybe $1,500 to your closing costs. Nobody talks about that. They just say, hey, pat ourselves on the back. We just built, 50 condos and how great this is. Well, the state of California, and again, the double-edged sword, they've lifted the parking requirements. So you drive down Victoria and Gonzales on the golf course, and they have these townhouses with 50 to 100 cars lined up on the side of a busy Victoria 55 miles an hour because there's not ample parking, right? And multi-generations are living in, whether it's an apartment, whether it's a condo, whether it's a house, we're not providing suitable space for them. And that's what I see that a lot of the problems is the space. I know it's why do they do condos? Because you can take 5 acres and build 50 units. You can't do that for single family residences.
It's all about getting the project to pencil out. And here in Ventura County, it's very, very hard to get it to pencil out, especially doing anything other than like condos, luxury sort of stuff.
Sure.
One thing that's interesting, it's very, very difficult to get through the permitting and entitlement process here in Ventura County. So for example, like it's not just the actual like dollar amount that these things cost you. It's like in terms of like your registration fee or whatever.
Yeah.
Say you're doing a project and you have a loan out on this project. You have these like quarterly interest payments, for example.
Oh, of course.
Okay, and listen, I don't think the county's just sitting around there like playing PlayStation or anything like that. I mean, some of these things do take time, but time is money, right?
Yeah.
And so, say you can actually like get through the permitting process and the entitlement process. Now you can actually get a shovel in the ground. Well, good luck finding the labor because we don't really have a labor force around here to do this work. So you're probably going to have to get them from like LA County or Inland Empire or something like that, which again, like adds to your cost. So it's very hard to, I guess my point is to make things pencil out in Ventura County. The other thing I want to add is you see at these like city council meetings, people getting fired up about like new housing developments that are being built, particularly in the city of Ventura. I would remind these people that if you're upset, you shouldn't be at city council. At this stage of the game, you should be at Steve Bennett's office and at Monique Lamone's office because the state has more or less taken away the city's authority to say no. If the project is within state building code and it is consistent with your housing element, it's basically approved by right.
Yeah.
Because the cities have said no for so many times for so long. So we do need housing, but all we're getting is, sort of like condos that you're talking about, which, for the people that are, maybe on the lower side of the ladder, that's not doing anything for them.
Well, and a lot of, and I'm speaking on behalf of my clients that come to me, and what is their thought process? They see a condo advertised in Ventura at $450,000. They're like, whoa, that's way cheaper than, or less expensive than a $750,000 home that needs to be gutted. I'm with you. But then we have to take into account the HOA dues, right? And I'll tell you, I've never seen HOA dues be reduced. Right. Year over year, it's increased. We can justify whatever that cost is. I understand the cost of business, the cost of insurance, the cost of this, and I always give examples. I own a second home up by Yosemite that's a PUD, a planned unit development. So it's a single family residence with a gated community. So it offers amenities. So it's much easier to lend on than a condo because, again, the house itself, the structure, the land is all mine. I just pay a fee for the services that they offer. Well, 10 years ago, those dues were $146. 10 years ago.
Okay.
They're over $300 now. So in 10 years, they've doubled. These started in the 60s, and so for it to exponentially increase at such a drastic pace very much concerns me. Now, again, maybe this is why I have frustrations with HOAs. I just found out, this is within the last month, that our HOA, and they've kept it under wraps, I'm going to just say it, they fraudulently took out PPP loans during COVID, which are not eligible. HOAs are not eligible, even though they're a nonprofit, it's not a 501c3, falls under a different code. They're trying to blame it on the bank. It doesn't matter. They signed, they read, they took out these loans for like $2 million, $2.5 million. Well, guess what? The Department of Justice caught them. They had to pay it back. And we just had to pay like a $700,000 fine. Where does that money come from? It came out of our reserves. So they justified that the loans, and I don't understand this, kept the business, the HOA afloat. Well, no, our HOA pays any amenity that we have. So their justification doesn't make sense. And now I already know a bunch of local homeowners that are going to be filing lawsuits. I mean, it's going to turn into just a terrible situation. Somehow I'm caught in the middle of all this. I just want to have my home
Right place at the right time.
and relax. And it's just like, you have these external factors that as an HOA, as a condo, hey, I'm not going to talk somebody out of a condo. If it's not owning a home or having home ownership with a condo to get your foot in the door, I just make sure that I educate my clients. Think about this. How close are your neighbors? Does it have the ample parking? How much are the dues? Read the board minutes. As we vet the condos, not only do we have to have financials, we also look at minutes, and we look at the board meetings because we want to see what are the topics that the homeowners are talking about and discussing. We want to see the maintenance stuff that's going on. We read that, and it's pretty interesting. The conversations
They can get very interesting.
Yeah, so crazy.
Priorities, right?
Yes, exactly. So again, I'm not hating on condos, everybody out there. I'm just saying it's a little bit more of an educated decision for you to get into and just be aware of.
It's just a whole different set of considerations than buying like a single family home.
Correct. Yeah. I just, as we open up policies and have new construction, I feel like there's some dynamic to having, even if it's small, a 3-bedroom, 2-bath, let's the way that we build now because of cost is to do 2-story. Do a 2,000 square foot 2-story home, right? You got 1,000 square feet on the bottom footprint, and then 1,000 square feet upstairs. Give your children a small backyard. They need that. I'll never forget. We moved from literally at the beach at Silver Strand, and one of the driving factors. We were there for 9 years. We loved it, but we had young children. Even though we were at the sand, it was a chore to go a few houses down and drag young babies into the sand, and it was like, let's get it. I want to own a lawnmower again. I want to have a play set in the backyard. And I'll never forget it. When we first moved in, for weeks, our kids would say, can we go play in the backyard? And I'm like, yes, go. Like, absolutely. Like, there's something like even even having little girls, they still need that, steam time where they're out there charging and rolling around and, running around. That's what it's for. And I think it's healthy. I think it would be healthy for a lot of families to have, I'm calling them a tiny home communities. Maybe we consider something like that where you have a little bit of a backyard, but it's your standalone unit. I'd love to see more communities like that. I'd love to see more communities with, let's say we take out the HOAs. We have like River Park has dual HOAs for those condos, right? You have the master community HOA, plus you have your specific condo HOA. You have areas like Fillmore that they have crazy Melloroos. So does River Park. And so how do we minimize some of those costs? Home buyers don't know walking into it how much additional cost it is because that home is not in an established area of Fillmore. Now we sit on the river bottom there and, where's the flood line? And, because this is new construction, there was no schools, streetlights, parks, sidewalks. Now the homeowner has to pay that, and they have to pay $700 a month on top of their normal taxes. Like, those are the crazy items to me that absolutely I want the politicians that are voting for this stuff to really put that into an equation of, if they were to buy one of our new homes that we're voting in right now, what is the cost difference versus an established home, even at the same price?
Well, it's interesting to me. I had this conversation with Jeff Lambert, like, I guess at this point, like several months ago. And, think of this like chart, right? Where on one side I have single family homes, and all the way at the end I have like big high-rise multifamily. What in the middle here is what we call like missing middle housing, right?
Yeah.
And that's like your duplexes, your triplexes, your little like walkable like cottage communities, all that kind of stuff. And I was kind of asking him like why we don't see a lot of that construction anymore. And what I learned was over the years leading up to like where we are now, most of those things are like literally illegal to build. Like they're not compliant with building code. And so I would like to see at the state level, for example, the building code change to allow more types of construction.
Yeah. Whether
it's like commercial or residential, either way, like particularly in this case, residential. But I think that we're not going to single family home our way out of this mess.
No, not at all. But let me tell you another, and we'll kind of go through this story here. I'm sure you've heard of Cal HFA.
I have.
Okay. Down payment assistance for the state of California. They have an ADU grant. Are you familiar with it?
Tell us more.
For up to $40,000. Great. You know how many inquiries I get for that? I think it's wonderful, right? Now let's dive into it. It's up to $40,000 in fees and permits that it covers, right?
So it'll cover those costs.
Yes.
Okay.
Which means, and a lot of people that are inquiring on this, in their mind, they have a home, they have maybe an attached or a detached garage that they're like, hey, I can carpet, I can insulate, I can add a bathroom, I can do this for $40,000. So they're like, hey, a grant, I'm going to come get this grant and we're going to add an accessory dwelling unit. No. The grant is catered towards a $200,000 to $250,000 build. And if you were to truly build in today's, like, you don't have already the roof line and it's part of your structure. If you were to just take a piece of your backyard that's bare land, okay, let's think about this. You have to build or pour a foundation. First, before even the foundation, you got to excavate, you got to do utilities, you have to pour a foundation, then you stick build it with the framing, get into the roof, and then get into finish work and utilities and whatnot, right? You start to add that up and you could do a rough budget. You're like, oh, 150. Well, you start getting quotes on it. It's going to be $200,000 and $250,000. That is more expensive than when I got into this industry of what you could buy,
like a full-on house.
Oh, full-on house.
Yeah.
And that's where I'm like, okay, we've done all this ease of, we tell ourselves we do this ease for building ADUs, but in reality, ADUs are not as easy to build as everyone thinks. And, and I'll tell you what I'm working on with WCDC. Are you familiar with them?
No, who is that?
The West Side Community Development, and that's here on the Avenue. And one of the things that we're trying to find is us do the hard work of streamlining the permit, streamlining where maybe there's a company that prefabricates 4 different layouts, right? So we can get that, prefabbed where all, we have it into like, a little roadmap here. Here, you pour the foundation, you get the utilities. These are the companies that we vetted that we believe they'll do it for rough costs. Of course, there's always like extras, but give them a ballpark. Hey, if your home falls within this category, running the utilities is $5,000, pouring the slab is $10,000. You buy this floor plan and it's $25,000. Having it pretty much laid out.
It's like a template.
Like a template, exactly. And that's what I think we need to do more of statewide, nationwide, to solving a lot of this housing. Right now, everybody's piecemealing it. And it's like trying to find a contractor that's willing to do it. Well, they're going to charge you rates. Again, at my cabin, I need to have a new deck. And part of that is I've had to extend it because I can't find contractors willing to work. My first quote for a deck was $70,000. Now, my deck is not a wraparound whole house. It's just the back of my house, $70,000. And I'm like, I'll sell my house before, I'm just like, maybe I'm so out of touch. I don't know. Well, I called the contractor, a cement contractor, and he goes, what do you want? And I go, I need some footings poured for these posts for a deck. And he goes, yeah, I really don't want to do that. Do you want I don't want to do that price? And I'm like, no, I don't want, if you don't want to do it, you're already telling me you're going to charge me 2 to 3 times higher. Like that is the era of contractors that we're in. And so again, if we can pool together and maybe this is what some of these contractors do full time in different areas, they're the ADU go-to guys. Hey, I pour concrete pads for this floor plan. They can knock it out in 2 days.
Dude, it's funny you say that because I was at a chamber breakfast like literally a week ago, and I don't remember the meeting. Stephanie Caldwell at the chamber could probably tell you. But there's a new chamber member that's like all they do is ADUs.
Yeah. Well,
so that person does exist.
Yeah. Well, I hope there's more of him, and we need to get his contact info. So anyways, again, just voicing, and I'm voicing for you guys. Hey, I'm discussing this, and I'm glad we have people like Rob that'll listen to me. So, this isn't just an echo chamber. We can get this message out to the right people to start making changes. And again, having an expert, having an advocate like Rob on the board of realtors, I think is a huge just advantage. And I'm so glad that you're doing what you're doing.
Well, that's high praise, and I really, really appreciate it. The success that we're having is only possible because we have members that are engaged. Also, as a political nerd, one of the things that I looked at before I decided to move to Ventura County, I looked at like the last few election returns, and I noticed that Ventura County is a relatively purple area. And that said to me, like, this is an area with people with a lot of different perspectives, but it's an area where you can get some stuff done. Yeah. So like, I couldn't be more excited or grateful to be here and to be solving these problems. It's the same job that I had when I was in Texas, but it's 110% different here. Yeah. Yeah.
Well, awesome. I know, man, we've already been going, I think, an hour and a half. So high level, is there some things coming up in the future? Any last comments or things you want to chat about before we get going?
So remember to vote. We will be putting information out throughout the year on some issues that we're working on. So I would encourage our members or anyone in the public, consumers that are interested, to pay attention, look out for those things. Along that same line, we are actually launching our own podcast and web series that will debut later this spring. It is great. The Legislative Lens podcast. And the goal for our podcast is to sort of talk about the intersection of like government and politics and like housing and real estate, and sort of like put all that together and where like the consumer fits in the mix and how they can be an effective housing advocate. And so we're really excited about that. Our first episode had the chief lobbyist for CAR, Sanjay Wagley. Our second episode had Supervisor Matt Levere. Okay. We'll be recording the third episode soon, and once we have a third episode, we'll release them all. So that'll be later this spring, and we're real excited about it.
Awesome. That's great. Another, and I'm not going to pull Rob into this, but offline we were kind of talking about, and I'm just going to plant the seed for you consumers. The NAR has some compensation rules that are coming down the pipeline. There's been some lawsuits. All I'm saying is people should start to listen in and get educated on this topic. It is not a matter of if, but when. It's going to change your home buying experience. There's a huge added value for a realtor to represent you. I firmly believe in that. They're there to help you. They're there to educate you as well. But they also need to get compensated. And how that compensation right now traditionally works is the seller pays that. That's going to be changing. I don't want to speculate on how and what and if and all that. I'm just saying, start talking to your realtor friends, your realtor neighbors, family members, see what they have to say. Start reading the articles, the legislation that's coming down on it, and just keep informed, because it's going to impact everybody that owns a home. And hopefully at one point, everybody that's listening does buy a home, because we're here to guide you through that. So
yeah, Greg, on that, I would add a great resource through National Association of Realtors. Just go to your internet browser, your Chrome, Firefox, whatever. Competition.realtor has updates from National Association of Realtors, both for consumers and members alike. So that's a tremendous resource that I can't recommend enough.
Oh, that's awesome. Thank you so much. Last thing here, we'll talk about how do we find you and get in touch? Like, what are the avenues? Where are you guys at?
So our main office is in Oxnard, but we have a satellite office as well in Ojai. So whether you're here in Oxnard, Ventura, we're easy, or whether you're out in the county, we try to be accessible. My email address is Rob, R-O-B, @vcrealtors.com. You can also follow me on LinkedIn. That's where I post a lot of like updates as far as news and kind of what's coming down the pike. Any questions that anyone has, they can feel free to reach out to me. If I don't have the answer, I will get it for them.
Yeah, thank you so much. Rob, it was awesome being here. Time's already flown. I feel like we're starting to get the sleeves rolled up. I could go for another hour and a half, but I try to make the podcast timely for our consumers. Maybe we'll have you back another time to discuss some more things that are coming down the pipeline, but I really appreciate it. I think it's good. And, my origins of business, I was always taught not to talk, politics and religion. Somehow the reality is politics really comes into every industry that there is, some more than others. Real estate, as my understanding, is at least 25% of the GDP. That means of our gross domestic product, we're spending in one way or another on housing, Home Depot, contractors. 25% of our economy is real estate related. It drives us. It moves us. We need it. And we need the people that are fighting for us and making the decisions that we believe in. So as Rob said, get out and vote. Make sure you're educating yourself on the people that you vote for. Align yourself with who the experts are wanting in. And just always try to do your best. And if you have questions, thank you, Rob, for providing even your personal email for consumers to reach out to and ask questions. And that's all we can do is ask, right? So without further ado, thank you all. Have a beautiful day. This is Greg Abrams with G Money, real talk on everything mortgages and real estate. And we out. Peace.